This is Ag Matters PM from the Iowa Agribusiness Radio Network, brought to you by the Iowa Soybean Association, your source for the latest Iowa ag news headlines right here in the heart of the heartland. With reports from our award-winning team of Dustin Hoffman, Riley Smith, Mark Magnuson, and Andy Peterson. Now, from the IARN studios in Des Moines, here's Dustin.
Hello, everyone, and welcome to Ag Matters PM from the Iowa Agribusiness Radio Network. I'm Dustin Huffman. Today is the 20th of October, 2025. So glad you could join us here today. Coming up a little later on in the program, we're going to talk with Sam Trainor of agmarket.net to find out how those grain and livestock markets closed today. But first, we're going to have a chance to talk with Rob Clayton. He is the Senior Vice President of North American Retail for Nutrien Ag Solutions. Had a chance to talk with him about what he sees coming forward for farmers to be profitable in 2026, and also talking about their new Nutrien Hub. Here now is the remarks we got up in Saskatoon. Talking right now with Rob Clayton. He is Senior Vice President of North American Retail. Thanks so much for taking a few minutes to talk with us here today.
Really appreciate it. It was a great mind tour earlier. I hope you enjoyed it.
It was a great time, and of course, gave us a lot better understanding of what happens with the potash industry and talking about how it's involved in global agriculture, not just North America, but around the world.
Yeah, well, we spoke about it earlier, but the Saskatchewan area is about 20% of the world's global supply of potash, and it's a critical mineral when you think about NPK. If you have those out of balance, you're just not going to grow a crop of any type. So really important part and a really important economic part of the Saskatchewan community.
And so talk a little bit about the products that you guys have there at Nutrien. I mean, the work you guys are doing here. I mean, you've got more than one mine. Obviously, I think it was 6 mines you guys have around Saskatchewan to be able to produce for that global marketplace, and the percentages that have to be met to keep everybody growing.
Yeah, well, we live in a geopolitically unstable world right now, and the one thing that the North American farmers got in their back pocket is a large deposit, in fact, the world's largest deposit of potash right here in Saskatchewan. And the 3 major companies that are mining that, are all doing it here in Saskatchewan. And there's scattered, deposits of potash around the globe in other places. But other than in Russia and Belarus, there's really, that's the second largest. And we all know some of the political risks and geopolitical risks that come there. So it's really important that we've got a stable potash supply. It's really important we've got an economic potash supply. And I would give credit to the administration in not having tariffs on potash right now that's going in, particularly to the US farmer, at a time when the US farmer can ill afford to have additional cost.
And I was going to go there next. I mean, obviously there's been some challenges with on both sides of the border here with getting trade to work, and obviously the farmers can't sit and wait for too long either, and that's affecting markets as well as supplies. I mean, what kind of things is Nutrien looking at to help make it easier, or what they can do to help get that word out that this needs to be taken care of?
Yeah, well, we've got a government affairs team that's been working with the Corn Growers Association, Soybean Growers Association, many associations, ARA and others, to make sure the administration understands the importance of potash to the North American grower. We've been successful just recently in getting potash on the critical minerals list. So, and as you're aware today, there isn't a tariff on potash as we sit today. So it's really important that we continue to inform the government, inform the administration of the plight of the farmer, I guess. But also, just from a practical point of view, in 2025, Nutrien's going to produce a record amount of potash. So from a supply point of view, in a supply-constrained market, when as we see some of these unplanned stoppages and so on around the world when it comes to production, Nutrien in 2025 is going to produce more potash than it ever has before.
And we talk about some of the geopolitical situations, whether over on the globe. That's already adding to some of the other problems that farmers are having financially, low crop prices and things like that. I mean, what kind of things? What's the message you're giving those farmers to how they can help power through this?
Yeah, well, I would advise our growers to get as close as they can to their crop advisor, whether that's a Nutrien Ag Solutions, and I'd love that to be a Nutrien Ag Solutions. We've got 4,000, I should say, crop advisors in the North American market. So I'd obviously love to have a Nutrien crop advisor on farm. But if you can't, if you're going to, whoever that may be, whoever your crop advisor is, there's a lot of innovation and technology that's available to these growers now that wasn't just a couple of seasons ago. So if you think about things that have come forward in soil science. There's some products that I can think of right now, like Infinity, that we've just launched from our proprietary business this year, Loveland Products, that is going to, in 3 different ways, 3 very new modes of action, provide a better outcome when it comes to nitrogen efficiency, when it comes to accumulating nitrogen from the soil and so on. So you can get more from the products than you could before if you use some of these technologies as you go forward. Soil science, again, when I think about DNA testing in soil, we understand more about soil science than we ever have before. So I would just say to the growers, run towards some of this innovation. Don't run away from it. And sometimes you get growers retreating when it comes to a tough economic time. My opinion is we've got to find a way to out-yield some of these low crop prices, because the worst thing you can do as a farmer is get a low price and a low yield.
It certainly is a tightrope walk right now, and we thought it was going to be tough at the beginning of the year, and going into 26, it's going to be more interesting. Talking about some of the technology and the things you guys are working at, you just launched a new hub. Tell us a little bit about that and what that all entails, what farmers can get from that.
Yeah, well, the hub is really about having, we're a bricks and mortar business, and we talked about earlier about maybe being a clicks and mortar business in the future. We still believe that people are really going to power the Nutrien business going forward, and we're always going to be as good as our best crop consultant. But what this allows us to do is engage with our farmers in a digital way so that we can put our crop plans in. We understand better from a Nutrien point of view what the growers are planning to do, so we can start to move product and services and so forth to the areas where they're most going to be needed and so on. But also, and most importantly, quite new in this, is a new financial tool where growers can apply for finance, be approved for finance, and go forward and purchase crop inputs when they agronomically need them rather than when their cash flow allows. There's a whole lot of great supplier programs out there right now. I wouldn't say they're well understood by growers. This is really simplifying that platform for them so that they can see the best financial offerings and to make decisions live at any time, 24 hours a day, not have to wait for a business hours discussion with any of our people.
So we know a lot of farmers are going to have tough conversations this downtime here, this winter. Obviously, Nutrien can be there to help have those conversations, help give them solutions to these conversations, and help find that balance for saving some money, but also making sure you're not cutting too many corners.
Yeah, absolutely. I would say farmers do need to find a way to get more from less. I don't want to hide that, but again, that's really what our LPI business is built around, is how do we get the most out of the crop inputs that we use. And our finance products are really there to support farmers, particularly in tough times like we're facing right now. We do see the major banks that are pulling away from not from secured lending of farmland, but it's just a fact that banks are moving away from financing of inputs, and we're seeing retail and others do more of that financing, third-party financing. And Nutrien's committed to that. We've been growing our Nutrien financial book for a long period of time. We are planning to grow it again in 2026, and we're going to be there to support growers when they need it.
All right, so where do farmers go to start having those conversations with Nutrien?
Well, obviously, we've got 1,500 stores right across North America, so walk into one of those stores whenever you want to. Our people will really love to see you. But we're at Nutrien.com, we're at NutrienAgSolutions.com, or even better, get on the Nutrien Hub, get an account on the Nutrien Hub. It's free. Have a look at the offerings that are on the Nutrien Hub, and I'm sure there's going to be something there that suits your business.
All right, Rob Clayton's been our guest here on the Iowa Agribusiness Radio Network. Rob, thanks so much. Appreciate it.
Really appreciate it.
Thanks again to Rob Clayton and the folks at Nutrien Ag Solutions for hosting us at that event last month. We're going to take a short break and hear from the Iowa Soybean Association and the Soy Checkoff. When we come back, it's the closing markets. This is Ag Matters PM.
Iowa Soybean Association is driven to deliver for Iowa's 40,000 soybean farmers. We're proud to provide objective agronomic research, a helping hand with soil and water stewardship, and timely industry news powered by the Soybean Checkoff. Learn more at iasoybeans.com.
It's time now for the Ag Matters PM Closing Market Summary, your source for market analysis and settlement prices from the day's trade in Chicago, courtesy of the folks at agmarket.net. Back here on Ag Matters PM, and it's time to run down those closing markets, and we're being joined right now by Sam Trainor of agmarket.net. Sam, I know corn and soybeans got off to a pretty decent start. So, corn pulled back a little bit, but where do we end up here on the day?
Yeah, we had a very nice day here. Good way to start the week. Soybean futures finished near the highs of the day, up around 13 to 14 cents. Corn futures were pretty quiet today. Soybeans definitely the leader. Corn only ended up being up about a penny or two, but nonetheless, good to see some solid price action here to start the week.
Now, obviously, focuses on trade, especially with soybeans, but also we're hearing, crop conditions from what we're hearing, because obviously USDA hasn't been putting out any information. I mean, how much that's moving the market, and what are we seeing? Is it mostly still southern rust and trade and all that situation?
Yeah, something that I've been looking at here is the cash market. Cash market definitely tends to tell the picture as far as what we're seeing coming in, and like you mentioned, with the fundamental news not being very much here at this point in time with the government shutdown. You're starting to see some basis pushes and a lot of these commercial elevators pushing to try to get ownership for grain here. And that's pretty uncommon seasonally for this time of the year. Usually towards the end of harvest, elevators are pretty plumb full with the crop, and they're able to satisfy all their sales that they have. But that has not been the case this year. I think a lot of that has to do with the poor price on the board. But I think there's more to be said about maybe the size of this crop isn't nearly as big as what we were anticipating.
Okay, and I know we've been hearing some reports too of elevators, at least out in the western part of our state and out into eastern Nebraska, where we're starting to see more piles forming outside the elevators. A lot of farmers that are dropping their grain off are storing it and not getting rid of it, and so it's been a tough situation, as you said, with those market numbers being what they are.
Yeah, absolutely, and that's why we're seeing some of these basis pushes, because the farmers getting pretty tight-fisted, especially with talks of government payments being put out as far as aid due to the low prices. Their mindset is we're going to be getting paid here, and we're going to hold out until we get some better values, and that's why we're seeing some of the basis stories. Interesting here locally in Decatur, Illinois. That's just south of us here. A little bit down there where the Farm Progress show is at. The ADM plant there is offering free DP all the way out to September of next year. Now, it's not very uncommon for them to offer free DP, but it's very uncommon to see that this time of the year. Like I said, right in the middle of harvest here, towards the tail end of it. Generally don't see that. So that's telling a story that the farmer's just not letting go of this crop here. Regardless of what's being done here. And I think, you look back at history, the old timers will tell you that basis runs the spreads, and spreads will run the futures. So, if we can get and the spreads have been strengthening up here quite a bit here lately. So if we can get the strength that we're seeing in the basis and spreads to work their way into futures, could have better times ahead.
Now, moving over to the livestock side of things, I know Friday, a lot of rumor floating around the cattle market, especially with President Trump's comments about maybe bringing in Argentinian beef. Of course, the cattle industry pushing back here this morning, getting a lot of feedback from NCBA and others about that. How did cattle fare today? Were they able to bring back some of those losses, or did it kind of just fall down the same chute it did on Friday?
Man, what a wild ride that market's been here really over the last year. It's it used to be that you see a 10, 20, 30 cent move and it was a decent day. And nowadays people just scoff at that. We were actually higher here today. Right out of the gates, we were up $3 or $4 just in the first couple of minutes of trading. Ended up finishing, the fats were about $1 to $2 higher. And the fats were right around $1 higher on the day on the nearby contracts. So, just a complete whirlwind there. And it just shows you how sensitive this market is to headlines. Like you said, we saw the headlines there on Friday, actually Thursday afternoon. And then Friday we opened up and feeders finished the day limit down. So that left us with a whole lot of uncertainty coming into today, because obviously once you close limit down, that expands the limits for the next day. And limits on feeder cattle futures are $9.25. So you're looking at nearly $15 limits here today. And if I'm glad that we didn't see a move to touch those limits, because things could get pretty ugly pretty quickly. And I think it's just a reminder for a lot of the producers and listeners out there, if you have some risk with feeder cattle or fat cattle, they're definitely not a bad idea to have some sort of protection, whether that's with LRP insurance or whatever it may be, maybe buying some put options, but definitely want to have some protection with all the uncertainty surrounding the cattle markets right now.
And then what about in hogs? What do we see come out of that market today?
Pretty quiet day in the lean hog market. Finished right around unchanged. They're kind of taking a backseat to all these major headlines with, cattle and New World screwworm and government subsidized programs and all that good sort of thing. So not a whole lot of action there today, but they looks like they closed down about a nickel there in the February contract today.
All right, Sam. Well, if folks want to get more information, look at some of the intel you guys have, what's the best way for them to get a hold of that?
Best way would be to visit our website at agmarket.net, or you could give us a phone call at 1-800-779-1515.
All right, Sam Trainor's been our guest here today on Ag Matters PM. Sam, thanks so much for the insight. We'll talk again soon.
All right, no problem. Thanks again.
That again was Sam Trainor of agmarket.net. Let's take a look and see how the numbers closed on the Iowa Agribusiness Radio Network market screen.
At the close, December corn was up 3/4 at 4.23 1/4. Soybeans up 12 1/4 for November at 10.31 3/4. Soy meal up $4 at 2.85 even per ton. Soy oil up 18 cents at 51.31. Chicago wheat up a penny at 5.04 3/4. Kansas winter wheat down 1.5 at 4.90 even. Kansas spring wheat up 1 3/4 at 5.33. Minneapolis spring wheat unchanged at 5.48 1/2. Oats up 4 3/4 at 2.99 3/4. On the Merc, live cattle up $1.82 at 243.65. Feeders up 97 cents at 372.67. Lean hogs were down 30 cents at 82.07. Pork cutouts unchanged at $92 even. And Class 3 milk 36 cents higher at 17.01.
And that's been our closing market recap, and that brings us to the end of today's show. You can find all our content online at iowaagnet.com, as well as follow us on Facebook, X, and our YouTube channel. And make sure you're subscribing and hitting the bell icon so you can be notified each time we put out a new video project. Also, don't forget about the free market analysis sent right to your mobile device 3 times a day with openings, middays, and closing numbers where you get your favorite Iowa Agribusiness Radio Network podcasts. Also, don't forget we have the Iowa Agribusiness Radio Network e-newsletter that comes out every day at 5 p.m. From the IARN studios in Des Moines, I'm Dustin Huffman. For Mark Magnuson, Riley Smith, and Andy Peterson, we thank you for watching. This has been Ag Matters PM.